Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today we're going to cover the EIA. We're going to break it up into our normal three parts of an overview, refined product, deep dive, and then looking at exports in the international market. Some of the stuff we covered in the OPEC show that came out today, or what is now Thursday. So we just want to just cover some updates because we've had some new data come across, but it hasn't been overly bullish, but just kind of digging into what was the impact from Hurricane Delta and what really happened in the overall construct of the EIA numbers and what does it mean for going forward. So if we turn right to here, you can see that we did have a crude draw. It was driven by PAD 3. So just remember, we're still having some product coming out of the SPR, the Strategic Petroleum Reserve. So the draw was actually 4.98, so about 5 million barrels. And it was driven by PAD 3, which had a draw of 5 million, and then PAD 5, or the West Coast, of about 1.6. Now, those things like PAD 3 specifically will start to adjust because if you look at crude oil production, it was down about 500,000 barrels a day. At peak, we lost about 1.78 million, and right now we've gotten back about 1.2 million. So that will start to come back. That'll start to show up in PAD 3. It's just important to appreciate that this probably won't cover the full decline, just because it's just a timing delay in terms of when it's reported, when things actually come back on. So we still are missing about 560,000 barrels. But again, as we continue to go forward, we'll start to see some of that come back. Shell has talked about some of their facilities were already having some scheduled maintenance. And because of Delta, just because people had to leave the platform and then come back, that added about a week. So we'll see a little bit of it stay offline. But again, that's something that was already scheduled to that perspective. The bigger thing that we're going to talk about is CUSHING, where we had a big build of about 2.9 million barrels in CUSHING, which is something that could be problematic as we continue to go forward, especially with production kind of hanging around this, call it, 11 million barrels a day. So just kind of diving right in, this is just looking at the total inventory, including SPR, just because we have additional drawdowns. You can see it's very stable. The slope is moving in the right direction, seeing some of this crude get pulled through. The problem is going to be where refiners going. And as we have additional commentary, like Gunvor is now mothballing a refiner in Antwerp. We have additional slowdowns in Europe. And again, just to talk about Europe right now is just because the U.S. isn't going to be impervious to additional slowdowns, just because the demand remains the overarching problem. And we did have a big draw in distillate, which we'll talk about. But again, a lot of that is mostly timing delays as guys were trying to rush to get a product out ahead of Hurricane Delta. Now we'll start to see some of that turn back around. And this is going to be the bigger issue. And obviously the big thing with distillate is we have the harvest happening in the Midwest. And then we did have a big increase in exports. So then when we look at just what's happening at CUSHING, you can see that when we had a big spike back in the beginning of April, when we actually had that negative 40, not to say we're going to see negative pricing again, but you can see we're starting to get closer towards that worry point where, how much storage is actually available? How are we going to see some of this pull through to come from CUSHING into the coastal markets? Because right now the numbers just don't really work yet, especially given where spreads are, to get some of this crude into Europe, specifically because Europe continues to be a choke point in terms of new, falling demand with new supply coming on or coming into that market, which is just going to be those overhangs as we kind of go forward. And then when we look at it commercial, excluding the SPR, you can see we still remain well, at that new all-time highs as we factor in just on the seasonal basis. But we're not really getting to that decline where we need to be to really start to see some of this normalize. Instead, we just we're hanging around. The expectations were for a little bit of a bigger draw based on API and estimates, and we're just not seeing that. And again, it's because we do have a relatively large production base, even though it should be coming down, and we should see additional we're estimating about 500,000 barrels come out of the market. getting to about 10.5. But again, we're just not seeing the exports, and it's really driven because those refiners just aren't operating, but helping not. So we're just not getting that oil pull through, and we really don't see that changing at least through the remainder of October. And the where we're trying to look at that and kind of focus on is really pad 3. And pad 3, again, the Gulf of Mexico, it's going to be a marriage of what can we import, what can we get from Canada, what are refiners doing, and the refiners there just remain fairly low. Again, we had a bigger impact because of Hurricane Delta, where some refiners, no one really shut down. They either stayed down from the ones that were still impacted from Laura, or they just reduced runs to a skeleton crew. Now, the problem is we're not really seeing that turnaround where no one is saying, oh, I'm just going to ramp back up, because there isn't that demand on the back end on the product side. And that's why when we look at imports, it's important to appreciate, where are the imports coming from? How are they moving? And here you can see that the pad 5, we had another increase of about 312,000 barrels. Again, that's going to be intermittent in terms of when does it come in. Pad 5 we think is going to continue to see some imports just based on the data that we've seen, but not at that 1.1 million barrels a day level. Pad 3, that's more transitory just because of the hurricane impacts from that. That's something that we'll start to see turn around. The bigger one is going to be Pad 2, because we continue to see a fairly strong demand for a Canadian crude coming into the market. So that's something that's going to be interesting. And then Pad 1, or the East Coast, is going to be a problem because right now, the ARB is open to bring gasoline from Europe into the U.S. market. And it's important to appreciate, because some people are saying, oh, well, the demand in distillate is really good given the slowdowns in Europe. But it's important to understand that most products and most of these arbitrage, that when you purchase it or sell it today, you're really not taking delivery for a 3, 4, 6 week period, depending on sailing time, where you're going. So there's going to be those timing delays, which we'll talk about more in the third segment when we talk exports. But that's something that is going to start to appear in our market, especially as we have Russian cargo that essentially skipped Europe. We have some distillate that's being kicked out of Europe that have been sitting offshore, going into West Africa. And those are things to watch in terms of where because we see a lot of this product just dancing around with really struggling to find that home, which is again going to continue to weigh on total oil demand until we can really absorb some of this additional product that's just floating around trying to find a home. And that's why when we look at utilization rates, it's going to be difficult, because you can't see a big increase in utilization rates when you have this floating product. You have to get that to get absorbed. Now, we had a decline of about 2% to about 75% utilization rate. Ahead of the storm, we were saying that we were going to get to about 74, 75. So we're kind of right in line. We think here there's going to be another drift of about 2 to 3 percentage points, getting to about 72. Before, when we got into October, we were assuming that we could get to about 68, 69%, maybe break that 70% level. But now that we're in the middle of October, it's unlikely we'll get that low unless we see another big shakeup where we have some additional capacity coming off. But we'll probably average or get closer to that 72, 73% as we go through the remainder of the month. Pad 3 had 196,000 barrels a day come off. That some of that will come back. We'll get back over to 7 million barrels a day runs per day. So that'll close some of that gap, but we expect to see some other slowdowns in some specific areas, especially Pad 2 and Pad 5. The issue with Pad 2 right now, or at least the benefit, is we are in the middle of the crop season where we're looking to, so there you do get that distillate pop, which again will keep some of them active, but then we'll see them go into a turnaround and at least slow down and slow runs as we go through at least into the end of October, and then as we get into November. So there's a little bit of a delay in terms of when that seasonality really strikes. The implied demand, gasoline took a knockdown. We said that was going to happen last week, just based on timing delays on when we get that flow through of gasoline from point A to point B, being the refiner and storage to that rack. But we did see a slowdown in total consumer demand, and that was driven based on, people already filled their tanks. Now we're starting to get some balances between new COVID cases, people adjusting a little bit, and just, the impacts that are residual from the hurricane itself. Distillate had a big increase, but again, that's more along the lines of a big, the amount that's going into the harvest and then the amount that's going into exports. The one nice bright spot in this point is actually jet fuel. Jet fuel had a nice little increase. Again, that's going to be more transitory, where we had to backfill. We had a little bit of an increase in airplane demand, airline demand, which we'll touch on. But again, this is something that is going to be kind of spits and starts, where we think that'll come off fairly strong as we go into this, not only this week but into next week. And then LPG remained strong. Propane had a small dip of about 61, but again, we think propane is going to remain fairly robust, especially not only in the U.S. but also in the international markets. So when we look at just at crude oil and floating storage, again, you had boats moving out of the way, so it's the way it went from floating storage to oil in transit. This is something that we're going to see a reversal, but we say it all the time, and I don't want to begrudge the point, but we're just going to continue to kind of bump along those lows, just because those refinery runs just aren't going to get to the level that's going to require enough oil in storage to kind of get it through and into the market. And then when we look at that import, obviously we dipped lower as the hurricane came in. We had the Loop, or the Louisiana offshore oil platform, shut down. We had the different issues. We have the Cameron that's still down, or the Calcasieu Pass, that's still down. So again, those things will continue to impact some of these imports into Pad 3 well past last week, and it'll continue to impact this week, and then we should start to see it normalize next week and start to normalize, get a bit more along those lines, where we should see back within the bottom of the cloud, but again, nothing crazy, back to that normal average. And here you can see the continued shift lower. We're going back to 1991. Those two, that big drop down was driven by 2005 and 2008, the two big hurricanes. And it's something where we continue to see us just kind of going sideways. And you can see the impact from Laura. And then, as we talked about when Hurricane Laura came through, that we would recover some of that downtime, but it wasn't going to be really meaningful, we weren't going to get back 100%, but probably 20 to 30%. And that's why we think that we're going to remain here at least through the rest of shoulder season. Now, what happens at the end of shoulder season? The question is going to be, how warm is it? How cold is it? What does winter start to look like? And then if we start to see a colder winter, not only will we see more natural gas demand, but we should see more heating oil get pulled through. But we, at the same time, just to consider, we had a big increase in distillate. So what are people preparing for? People are making sure that their heating oil tanks are filled so that you get that pull through. So again, we have to appreciate that we're in the seasonal component where guys are signing up to get their heating oil. Guys are making sure that they're filled. And that's something that we're going to have to dig a little bit deeper on as we go through the next segment.